Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. It's been a pretty decent week for the market. It is Friday, which is a big Q. I'm Surabhi Upadhyay. With me is Reema Tendulkar today. And the birthday boy in the house, Nigel D'Souza. Wish you a very happy birthday, Nigel. You're a fabulous colleague, fabulous friend, and we wish you all good things along the way over the next 1 year.
Well, thanks a lot for that, Surabhi. It's great to be here and receive all the love. And I've been here for 14-15 years. And every single birthday, I prefer to work because the warmth, the love you get. And, I thank CNBC-TV18 for that. It's been a good year. And hopefully the next one is even better than the past one. But thanks a lot for all your wishes.
Your warmth, your positivity, and your
energy
and the ever helpful nature. The day you're not there in office, things are very quiet. So I hope this day is as vibrant and full of life as you are.
Guys, by the way, I've started the planning. The snacks are coming, then the party,
Breakfast,
then the after
lunch.
party. I'm keeping the plan.
I'm on air till around 11 a.m. At around 11:30, you'll have fresh snacks on the floor for everyone. My PCR, makeup team, everyone, everyone who makes me look good and tolerates me every day. And as I say, the good vibes come from the fact that we never sleep without, making up for anything that was amiss during the course of the day. But thanks a lot for your wishes. We've got a market to get to. So let's get straight to the action.
Okay, and the market's actually been in decent form, you'd have to say. It's not been a bad week, like I said. It's not a week where you've had big pops on the index. It's not a week of huge moves, but all things put together, the Indian market has been climbing walls of worry. It has been climbing higher. So let's start with what the latest is. Now we are back to reading the signs and reading between the lines when it comes to the India-US relationship and dialogue. And let's start first with the comment that came in from Commerce Secretary Howard Lutnick. Now, he has said that India must make meaningful concessions, starting with reducing its reliance on Russian crude. So despite the social media exchanges between Prime Minister Modi and the US President, there are still a lot of noises around Russian oil. Take a look at this.
We're going to sort out India. India basically has to open their market, has to stop buying Russian oil. People don't remember, India didn't buy Russian oil before the war with Russia and Ukraine. They had 1% of their oil was from Russia. And now 40% of their oil is from Russia because we've sanctioned it so they can buy it, $7, $10 a barrel cheap. So they're buying it, refining it, and then selling it to the rest of the world and making a bundle. So the president called nonsense on that and said, you got to stop that stuff. So I think India will sort it out once they stop buying Russian oil.
So this whole Russian oil business is still a big talking point. But let's see, as long as you can talk, about it and maybe come to some sort of understanding, it would be extremely helpful. That's at least the base case the market is going with. We've also got some comments from the person who's going to be taking charge in New Delhi as the US ambassador to India, Sergio Gore. And he has again, spoken about Russian oil, saying that the president has made it clear that India must stop buying Russian oil. And he also goes on to say, it tells you that Washington is watching the overtures between India, China and Russia very carefully. He goes on to say that we will make it a top priority to see to it that India is pulled into our side and away from China. There might be some slight moments of hiccups right now, but we're on track of resolving this in the ongoing trade talks. So largely positive. They're reiterating their stance on Russian oil, but talking about taking the relationship forward and putting it back on track. So that's as far as India-US is concerned. Now let's come to the rest of the market cues. And we've had actually a pretty strong close across Wall Street once again. And it's been a market, moving on steroids. The market itself is up about 1.5% so far this week. And yesterday was more of the same. Now, yesterday, twin factors played out, which made the market quite excited. You had labor market data, which was weaker than expected, and you had inflation data, which was more or less in line. So let's look at the numbers. That's the CPI number. 0.4% rise month on month, more or less in line. Some estimates were saying 0.3. The year-on-year picture of 2.9% is also in line, though it's inched higher versus the July print. So that's inflation, not a shocker. And look at the labor market data. The jobless claims data is something to take note of. Jobless claims in the US are at the highest level since 2021, and that number was above estimates. And that led the market to pick up the hope that, yes, indeed, there'll be a rate cut next week. 25 basis points is the base case if you're looking at the market indicators as of now. Because of this, there was a bit of a move in the money markets as well. Yields have been moving higher. Bond prices are rallying in anticipation of that rate cut. The US 10-year closer to the 4% mark. There was a slight drift down in the dollar as well. So we'll watch for this. All eyes, of course, on the US Federal Reserve. Coming to our market here, like I said, it's been a decent week. The Nifty has climbed about 1%. The mid-cap index has done even better. Look at that, 1.7% on the mid-cap index in the last 4 trading sessions. And if we talk about the levels now, Nifty is at 25,000. It probably is going to meet some resistance around the 25,150 mark, and the lower zone of about 24,800 to 900, where the moving averages come in. They are sound support. Right now, Nifty obviously is above everything, 20, 50, 100, 200-day moving average. The question is, can the bulls continue to build from here? Nigel, how's it looking when you look at the F&O action?
Well, it's looking good, actually, for the Nifty. And the good news is the Nifty is actually performing in step with what we are seeing in the global markets. Remember, in the past year or so, we've actually been underperforming. But it's good to see that we're performing in step for this week itself. And also, we're on a 7-session winning streak. And the close that we saw yesterday was a multi-month high. So that's very, very good news. Now, the few indicators that you're getting, going by this week's cues itself, GST rationalization, very, very good. It will lead the economic recovery, which is good. But the market's positive sentiment comes from the fact that if there is some kind of movement on the India-US trade point, you will say that, in fact, things are not so important with regard to the United States. We can offset some of that. But this is a sentiment indicator. And, this goes to show this week itself, all the positive cues that you have been getting, the sound bites as well, that the markets are actually fixated on this. India-US trade deal is something that the bulls want. The institutions, well, they are net buyers. Remember, the last few trading sessions, we have had large block trades as well. But for the last many trading sessions, the institutional number is a net buy. So you like that. What about the FIs? We've been making this point, right, that the FIs are not getting follow through on the short side, and sooner or later they'll have to do that. That's what's gradually beginning to happen, because the short positionings came down by around 2,100 contracts odd. The short positioning from around 92%, which is the highest we have seen ever in percentage terms, has come down to around 89%. And the next graphic plate will tell you the story. Because the short positioning has come down by around 10,000 contracts, the FI net short positions from around 1.92 lakh contracts on the short side, that's come down to around 1.82 lakh contracts on the short side. And that as well should come up for you. Just take a look at that. So there is some short covering that's taken place. And that perfectly ties in with the Nifty Bank, because the Nifty Bank was the one where the shorts were piling in. And in yesterday's trade, the total open interest on the Nifty Bank was down by close to around 4% approximately. So that's clearly telling you that there is a bit of a short covering bounce. This is the October contract. But the near-term contract, we're definitely seeing some bit of a short covering bounce that's taking place on the Nifty Bank. Moving to the options data, then the 24,950 call, the premiums around 150 rupees out there. And there are signs of writing out there. While on the downside, the 25,000 put. So just for today, if you're looking at it, on the downside, going by there is writing out here, the 24,900 mark becomes important. And on the upside, since that's writing at around the 24,950 call, the 25,100 becomes a bit of a resistance mark. So those are the crucial levels for today's trading session. Let's focus on the two large components of the index. One is the Nifty Bank. Yesterday was a good close. We ended pat in line at around the 20 DMA. You wanted to get past that and gradually move higher as well. So a close today on the Nifty Bank, it seems to be finding its form. That's going to be important. And Tech Rima will tell you about that. Infosys is buyback could support Infosys as a stock, and also because of its weightage on the index. We'll have to keep an eye out on that. And in the last month or so, Tech has suddenly come back. Year to date, it's an underperformer, but that one, in fact, has outperformed in the last week or so. So that's good news as well.
Well, it also helps that NASDAQ is ripping Wall Street.
Yeah.
The NASDAQ index closed up about 0.7%, and it was the 24th record close on NASDAQ for this year itself. In fact, U.S. equities did well. The Dow topped that 46,000 mark for the first time, and Asia's carrying forward the lead from Wall Street overnight. So you've got a Hang Seng, you've got this Korean market, Kospi up more than 1%. The Taiwanese market's also up close to about 1%. So things are looking good across Asia, but let's find out the cues that we've got from the global markets and how we can interpret it back here in India. William Lee, Chief Economist, Executive Director at Milken Institute, is now joining us on the show. Thank you very much for joining in. Let's start with the US CPI inflation print, right? A little hotter than expected, but not too hot. On the whole, in line. We kept thinking that this, the tariffs, will start hurting, will be inflationary. But is there any evidence of the tariffs imposed by the US impacting inflation? And then the weekly jobless claims at the lowest level in 4 years. What did you make of that?
Well, as far as inflation is concerned, people are looking with an extreme microscope to try to find some evidence that these tariffs are starting to take hold. They're starting to push up prices and push up prices on a widespread level enough to create inflation concerns. None of that has happened. We see some evidence that some prices are going up because of tariffs, but they are really small relative to the prices that are going up, not for inflation, not for tariff reasons. Households spend a lot of money on food. They spend a lot of money on shelter. They spend a lot of money on gasoline. Those are the things that are going up in a significant way that concerns the Fed, because the service inflation for housing really hasn't come down, despite the fact that real estate prices have come down. Energy prices, which were on a downward trend, have suddenly turned around. In fact, I think it's almost a 2% rise month over month. And that is a shocking reversal, considering that President Trump has made a high priority on lowering energy prices. And finally, food. Cattle prices and protein prices in general have popped up. And there again, it affects households' budgets tremendously, because again, we're talking about 12% of their budget on food, 6% of their budget on energy. And these are the items, I think, that where inflation is showing up, and that is not related to tariffs.
Okay, we'll see how those numbers shape up. As of now, just under 3% on a year-on-year basis, William. But overall, the U.S. market has been doing exceedingly well. Tech has been, rip-roaring higher. So if the market is doing so well, and if the economy is not really weakening, I don't know, give us your sense on the labor market because of those jobless claims numbers. Would you really... and tie that in with the Fed expectations. Is the market and the economy is doing well? Why should the Fed cut rates?
The market is doing well because the inflation fears have not shown up, but the labor market fears and the slowing that comes with the labor market, those are starting to gain some momentum. Today's unemployment claims is important because it shows that the momentum is not slacking off. And by the way, the Fed's new framework says they will not just concentrate on the unemployment rate the way they did before as an indicator of labor market strength or weakness. They're going to look at all of the indicators in a more comprehensive way. And that's why these claims have gained so much more prominence now, even though in the past they were considered as just noisy short-term data. Now they are an important part of the mosaic that gives us a picture of what's going on in the labor market.
All right. Hi, William. Good to see you. And as always, what are the odds, though? The markets are running up. The U.S. markets are running up in anticipation of this rate cut. The problem is the dollar index is weakened, so that's going to make imports a little bit more expensive for them. Mm-hmm. And the other point is this tariffs now, the negative impact will start being seen in the next few months. So it's going to be a little bit tricky because the Fed will cut rates in all probability. Do you see that the U.S. equity markets, after the kind of run that we've had, the challenges ahead as well, and the valuations, it's getting to the stage where the U.S. markets peak out?
Yeah, I remember a lot of this market strength was in a specific trade, the AI trade, the tech trade. And it's starting to broaden out because there was more and more confidence that the investment incentives put in place by President Trump under the Big Beautiful Bill and the tax reductions and they yet to see the regulatory dismantling, those are the things that are supposed to spur investment. And so that's why the market started to broaden, but not so much yet, right? The main part of the bets that are in the market are still on tech and AI. And the fact that the tariffs are starting to come into shape to bolster more foreign capital flowing into these sectors, that's, I think, a very good sign that specific parts of the market are doing well. Now, you're right. The dollar has come down a bit. but it's still higher than it was 2 or 3 years ago. It's come off of a huge peak of February, and I think that's where the overvaluation was, rather than the normalization that's taking place now is normalizing rather than a source of concern for a weakening dollar.
William, what's the view on India's macros? The Q1 GDP print was blockbuster, 7.8%. Then you've got GST rate cuts, which will further fuel demand in the second half of the year. But on the other hand, the rupee continues to hit record lows. I mean, tie that in. And what's the call on India now?
I think the call on India is still an optimistic one because of exactly what you said earlier, which is that the relations between U.S. and India have not been completely fractured to the point where they cannot be repaired. I think the ups and downs that we've seen since early February to the lows of the recent period when Prime Minister Modi started to make overtures to China and Russia and more strident statements about the BRICS countries. I think the core of the U.S.-India relations has to be a longer-term view. India needs the U.S. because of the complementary type of investments that we could take place here. India also wants to be a player on the world stage and doesn't want to be a handmaiden to the U.S. And it wants to make sure that the world knows that they are not going to be kowtowing to the U.S. And so that balancing act, I think, is going on. And I think everyone realizes it is a balancing act, and there will be ebbs and flows, but on average, the trend is very positive.
Okay, all right. And the market's been taking note of that here as well. William, great conversation as always. Thanks very much. You have a good evening out there, and we'll, of course, catch up again soon. Thank you. Let's quickly run through the rest of the show lineup as well. And here's what we have for you today. At 8:35, we'll be in conversation with Richard Redoglia, CEO of Matrix Global, to talk about oil prices and what the trends are there in that market. At 9 a.m., we'll have Kumar Rakesh of BNP Paribas joining in, and he'll talk about the auto space. I mean, auto stocks are really revved up, so is there more to the rally after the GST cuts? We'll find out. At 9:20, Manishi Ray Chaudhary joins in. He is our market master of the day. At 9:35, we'll be in conversation with the management of Prestige to talk about demand trends in the realty sector. After that, the management of Paras Defense and Astra Microwave will be in conversation with us. We'll talk about this 15-year defense roadmap that has been laid out by the government and what companies can hope to gain from it. And towards the end of the show, Sumit Abrol of Grant Thornton Bharat will be discussing trends in outbound M&A deals.
All right, time to slip into a quick break. We've got a lot of stock-specific action to track today. We get to that in just a bit in our special Top 10 segment. We're looking at Infosys, Lodha, Bharat Forge, JBM Auto, GSW Energy, NBCC, GMR Power, GSW Infra, Travel Food Services, and RailTel. That's sort of a day. We got positive news flows. We're having all our top stocks that could be reacting to positive news flow. Take that break, come back, get into further detail on all of these names.
Welcome back. So the cues, across Asia are also fairly okay. Wall Street, anyways, had a very, very strong handover. And you look at some of those regional markets. The Hong Kong Hang Seng is racing away. The Japanese markets have had a very, very good week as well. Let's pull up the implied open and see if the bulls can indeed build on from where they left off things yesterday. That's not bad looking at all. 100 points higher. And if we do get that kind of a gap up, that's the first line of resistance that we start running into. So we'll see if that momentum can really last. Well, lots of stocks to focus on, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, hi, good morning, and happy Friday to all of you. Let me go with Rima first. Rima, Infosys, buyback details are out. Tell us.
It's a big buyback, 18,000 crore rupees, much higher than market estimates of about 14,000 crore rupees. It's a tender buyback. The buyback price is 1,800 rupees. That's about a 19% premium. The company will buy back 2.4% of its outstanding equity. The fifth share buyback by Infosys to date, and this will be their largest ever. The last one was about 9,300 crores. So and this one is practically double of that at 18,000 crore. And as I said, expect the stock to do well, though it has done well. Yesterday it cooled off a bit. It was down 1.5%. But since the buyback announcement, it's been higher. But just the size, 18,000, is so much higher than what the street was anticipating, which was 14,000 crore. I suspect the stock will do well today.
Okay, all right, Rima, got that. So we're definitely keeping emphasis on our radar as well. Let's look at Lodha. Sonal is joining in. Sonal, Lodha seems to be setting up some massive mega data center just outside Mumbai. Tell us more.
In Palava, that is. And remember, Palava continues to be a big developmental center for Lodha overall as well. And they have a warehouse already, and now they have inked an MOU with Maharashtra government. The total investment will be 30,000 crore rupees. The company says the park will have a planned capacity of 2 gigawatts for green integrated data center, and it will be hosting multiple international and domestic players as well. Of course, it's at the initial stage only, and the data center will be set up in Palava. We need to understand how much investment will go in from Lodha, what kind of financials will come out of it. But yes, this is something which is positive for the company overall.
Okay, all right. Sonal, thanks a lot for that. Well, let's hop across to Sud. He is the man in focus all through the week, getting us something or the other. This time around, Bharat Forge and JBM Auto. Sud, tell us more.
Good morning, Nigel. So for Bharat Forge, it has made 2 announcements. So first, it has bagged an order from Abu Dhabi company, that is MP3 International. It's a defense order. And second is that it has signed MOU with a UK company that is known as Wind Racer. So first, talk about Abu Dhabi order. So its arm, that is Kalyani Strategic Investments, has bagged an order to supply artillery system critical spare parts to UAE. And they will supply large caliber 155 barrels for howitzers. Basically, this is used to deliver long-range, high-explosive fire support. Second, MOU with Wind Racers. So, Bharat Forge and UK's Wind Racers have signed 2-year MOU, and that is for deployment, localization and application of Wind Racers unmanned aerial vehicles, and that will be deployed across the country. For JBM Auto, its electric mobility arm, that is known as JBM Ecolife Mobility, has secured $100 million funding from International Finance Corporation, and that fund will be used to purchase and operations of more than 1,400 electric buses across the country.
Got that. Thank you. Let's go across now to Vivek for more stocks which are in the news today.
Well, that's right. Good morning. Quite a few stocks in focus. On the back of news flow, JSW Energy, the company has gone ahead and commissioned close to 317 megawatt of renewable energy capacity in August, taking the company's total installed capacity to 13.1 gigawatt, improving the earnings visibility. NBCC, a very interesting update. The company has gone ahead and signed an MOU with RICO, which is the Rajasthan State Industrial Development and Investment Corporation. Now, this particular MOU is for the development of Rajasthan Mandapam and infrastructure, various allied infrastructure projects near Jaipur Airport. The total value of the project is close to 3,700 crore, and RICO will actually provide NBCC an initial interest-free advance of close to 50 crore. Along with that, the Rajasthan government also will provide financial support up to 635 crore for the development of Rajasthan Mandapam. GMR Power, that is in focus. We don't talk about it too often, but an important development. The Supreme Court has gone ahead and dismissed civil appeals filed by Haryana as well as Odisha Discoms. So now the company will receive the extra payments in terms of coal price hike pass through. So it's a positive development coming in as far as GMR Power is concerned. They will get both the balance amount as well as the interest for the last 8 years. JSW Infra, a small acquisition. The company's subsidiary, JSW Port Logistics, has acquired brownfield rail siding in Karnataka. This is a site that spans over 86 acres, and the total consideration for the transaction is at close to 57 crores. The rationale is that the company says they will develop an ecosystem of rail link terminals as well as establish multimodal connectivity.
Okay, all right, Vivek. So we will keep all of those stocks on our radar. Thanks very much. Let's bring in Vinny as well. She's tracking a couple of, I think, travel and, food companies. So let's find out more. Vinny, what's on your radar?
Hi, so I'm keeping an eye out on travel food services. Now, a positive news flow coming in here as the company has actually been awarded the license to operate travel QSR and lounge as well as food and beverage services at the domestic airport in Kochi, the Kochi International Airport. This is going to be for setting up, operating, maintenance, management of food and beverage services, one at the lounge, at the bar, as well as the main security holding area, which they'll cover. They'll cover 11 QSRs, as well as one is going to be food and beverages in the lounge area as well. Time period, 5 years, can extend for 2 more years as well. So big one coming in because out of the 15 large airports in India, they have 14 of it now covered. So good one for the company. Also, Railtel, keep an eye out on that one. Again, order wins coming in for the company. One is a 70 crore order. This is from Nashik Municipal Smart City Development Corporation. Execution time period for this is till 31st of December 2026. And the other one is a 32 crore order win that they've received from Panvel Municipal Corporation as well. So total order wins of around 100 crore coming in for Railtel.
Thank you. Let's do a quick recap then of the top stocks with positive news flow are Infosys, Lodha, Bharat 4, JBM Auto, JSW Energy, NBCC, GMR Power, JSW Infrastructure, Travel Food Services and Railtel. And well, no stocks on our radar that are expected to open in the red today.
Okay, all right. Well, let's go back to Sudarshan. He's the busy man this morning, bringing us some top 10 stocks, going through a lot of brokerage reports. So, Sud, tell us what you picked up today in terms of reports.
So, before I go to the brokerage corner, do you know, Sonal was talking about Lodha, and because I stay in Palwa, do you know how much land parcel Lodha has over there?
No, please tell us, Sud.
It's more than 1,000 acres.
Wow.
And even Amazon is building one data center, like almost on that side of area only. Now, coming to the brokerage corner.
So that's interesting, you know. So I'll tell you what, I think I'll be coming across. We'll come to your place, you know, have a drink and then maybe look at some of that, you know, just for viewership purpose, but for drinking purpose, it's all drinks on you.
Yeah, I'll join in as well soon. See you soon. But for now, we've self-invited ourselves over. Now, after this, let's talk about the brokerage notes as well.
Yeah. So now talking about the brokerage corner. So first in the list is Citi has written on autos and it has mentioned few catalysts. All the catalysts already we know. And those are first GST rate cut. Second is income tax revision. And third is lower interest rates. And it continues to prefer passenger vehicles over commercial vehicles and two-wheelers. It says industry growth could be much higher than all the brokerages have factored in their estimates. And for two-wheelers, passenger vehicles base also remains low if you compare against two-wheelers. So Maruti remains top pick for Citi and it maintains buy call and target is raised to 17,500 from rupees 14,400. For M&M, again buy call target is raised to 4,170 from rupees 3,700 and for Hyundai target is raised to 2,900 from rupees 2,400 per share. Now coming to another brokerage, Investec has written on Lupin. It has upgraded the stock to buy from hold and target is increased to rupees 2,265 from 2,100 per share. It says company is well placed to ride upcoming GLP-1 opportunity in India and post-correction, recent corrections their stock has seen. Even valuations have become reasonable. In the base case, it's expecting a strong FY26. After that, a moderation in FY27 and again, EPS growth can be seen in FY28.
Okay, thank you very much for that. We'll slip into a break on that note. On the other side, we'll connect with Siddharth Khemka of Motilal Oswal Financial Services for some fundamental stock talk.
Welcome back. Hope you're having a good morning. Well, crude prices are lower this morning as concerns over possible softening of US demand and broad oversupply offset threats to output from the conflict in West Asia as well as in Ukraine. Richard Redoglia, the CEO at Matrix Global, joins us on the show. Hi, Richard. Good morning. Good to see you, Ben. Well, unfortunately, some of the geopolitical issues have crept up yet again. But clearly, demand is rather soft and there is an imbalance between demand as well as supply, given that crude oil prices, they can't get above that $68, $70 per barrel mark. How are you seeing crude oil moving from here on?
Thank you for having me today. I don't think it's going anywhere. I think I've been on your show now for the last, I think since the Iran-Iraq affair, right? And we saw the spike in prices there. And what that spike showed us is a market that was structurally short, that the market, that the traders, that the money in the market had was structurally short. Those two events in Iran caused the market to cover those shorts, and that's why the spike came from, right? So our visit above $70, I look at WTI more than I look at Brent, come here in the States. Those spikes to $75, $78 were a function of shorts covering. Once the market looked at what was going on and realized that nothing was going on in Iran, that what we would see is the oversupply of the market come back in. And two things have happened. One is the market is balanced, and so the risk, or consider the war risk, has declined by a couple dollars. So that's out of the market. But equally as important is OPEC. OPEC has had a schedule for the last 4 years where they pulled barrels off the market between 1 and 4 million barrels, and they said we're going to do this in an orderly fashion, and we're going to do it over time, and that's what supported the market effectively above $70 for the last 3 to 4 years. They're no longer doing that. Simultaneously to that, we're seeing a significant production coming offshore South America, both in Brazil and Guyana. And so there we have the effect there. As it relates to demand in the United States is not a problem. Demand is going to be what it's going to be, and the U.S. economy is going to be fine. It's more how one views demand in China, which is going to be flat, and more importantly, what it's going to be in India.
Yeah, so, and demand even, I guess, in India has been pretty steady. But Richard, then there is the Russia question as well, right? And no one knows, and we don't know if EU is going to bite the bullet, if the US is going to move first. What happens if Russian oil or oil assets get sanctioned? Does that lead to some sort of an immediate shock? It's a hypothetical question right now. I just want to know.
No, that is an excellent question. That is really the question we should be talking about right now. So China imports 2.2 million barrels of Russian oil. India's produced about 1.4 million barrels of Russian oil. I think the Trump policy is a bad policy. I think what he's doing, I think Trump, most of his policies are good. I think this is a bad one to threaten to put 100% tariffs on India and China because they're importing Russian oil. Both those countries, India in particular, can use Russian oil at a discount. If it's getting into a discount, it's better for the Indian people. I'm sorry, the question is going to be politically. Is there a balance? China will not go by any type of sanctions. But let's see the example. Let's say India and China do. The market would spike significantly because that's about 3 million barrels that would have to find a home somewhere else. And it would also put a significant discount on Russian oil. So it's a question. I don't think that you are sitting in India, so you tell me. I believe that Modi will continue to buy oil. They might buy a little less. I think Reliance and maybe some of the private companies might buy a little less. But I imagine IOC and the other state-owned oil companies will continue to buy Russian oil.
No, absolutely. They have to now. And that's been the stated stance here, that really no one can tell us what to buy from where, and we need to do what is economically right for the people here. But just
100% agree. That's the exact policy.
But just to go back to that point, in case, because now President Trump has lobbed the ball in the European Union's court, right, saying that you have to impose tariffs. But in case there are any sanctions on Russian oil, what happens to, say, Brent? Will it be a 3, 4, 5% impact? What happens?
Well, if the only way that can happen, so the only thing that's going to happen is, does India not buy Russian oil? That's the only. There's only two outcomes here. Does China not buy it, or does India not buy it? And if the answer is neither of them, both continue to buy it, then nothing's happened to price. The question becomes what happens from an economic perspective and the pressure that will come if the EU decides to do these 100% tariffs. I'd be surprised. I have no idea. I'd be surprised if the EU agrees to opposing those tariffs. Now, theoretically or morally, they should, because they are so against Putin and Russia. So really what they should do is kind of put their money where their mouth is. If Trump's going to do it, the EU should do it. Will they? I do not know. And that's another can of worms that we would be very difficult to get back into.
So, okay, talking in terms of price ranges, you said you look at NYMEX more closely, which has been, well behaved around 61, 62. As we look at the next couple of months going into the end of the year, what would be a range that you'd keep in mind?
I've been saying for the past few months, I think prices are falling. So the $62 price you're looking at right now on the screen, or $63.10 or whatever it may be, $62. That's the lowest price since June, right? So we are bumping up against what could consider to be, if you had a price chart, you put a price chart up, you would see that we're in a very vulnerable area. If this WTI market or Brent falls another $1.50 or so, it's breaking out to prices the market had not seen all the way back towards the middle of the year, or excuse me, the beginning of the year. And so I'm thinking down. I don't think China or Russia are going to do anything. And but there goes makes the market. So if they do something, the market will move up a little bit. But even if it moves up, I think every rally will get sold. It'll just be a matter of time before those barrels re-enter the market, because there's going to be no home for them to go to.
Okay, all right, got it. So you don't see a big spike up happening,
Right.
which is good
At
news.
all.
Which is good news for consumers like us and importers
Right.
like us.
Can I make one point? Can I make one point?
Yes, sure.
Can you see behind my head?
Yes.
Right there. 24 years ago, that's where I was. I was at the base. See the two towers there below the World Financial Center.
Yes, yes.
That's where we were 24 years. I was not there. My office is there. I worked there for 20 years, and my office is in that tower, looking at those two towers 24 years ago. So let's say, think a moment of, it's 9/11 in the United States.
Absolutely. It is a day that the world and definitely the US is never going to forget. And we just hope that nothing of that sort is repeated on humanity ever again. Thank you so much, Richard, for joining us today. And on that note, we have to, I think, take a very quick break. Yeah, and then we'll go back to talking local stocks here. We'll have Siddharth Khemka joining in a bit. Our technical experts will be with us with some trading ideas as well.
Welcome back. The bulls have been slowly controlling the markets now. We've had 7 good days on the trot, and today could be the 8th. The GIFT Nifty is currently up close to about 70 odd points, and IT could provide support today, particularly Infosys. Siddharth Khemka, Head of Research, Wealth Management at Motilal Oswal Financial Services, is now joining us on the show. Siddharth, the first question is on Infosys. Should shareholders tender in the buyback at 1,800 rupees per share? Is it attractive?
Good morning, Rima. Yes, I think if you look at it's a kind of dividend that the company is giving back to the shareholders. So definitely the current shareholders and anyone looking to get a good dividend yield in the current market, value investors, they would definitely like the kind of premium that the company is giving on the current price. So I think purely from a dividend yield perspective or a kind of a value investor should look at participating in this buyback from Infosys.
Okay, participate in the Infosys buyback. That's a thumbs up. Siddharth, good to have you in. But what about the rest? I mean, yesterday TCS started running because people then get, they get very excited. They think maybe TCS will also do something similar. I don't know. I mean, how do you look at the other large peer?
Yeah, good morning, Survi. I think there are two things to look at purely from a Indian IT sector perspective. The huge buyback that Infosys announced, that kind of shows the conviction that the management has that the worst is behind and the stability in the business going forward, and hence returning the cash that the company has on balance sheet. So in terms of valuation, we get some comfort that the downside is limited, the worst is behind, and that is a positive rub-off effect for the bulk of other large IT players sitting on cash. So there is definitely an expectation that some of the others, especially the largest Indian IT company, TCS, could also follow suit and announce a buyback or a special dividend, something by way of which they reward the shareholders in the bad times.
All right. Hi, Sid. Good to see you in this morning. Let's focus on Lodha. You know, they have inked an MOU with the Maharashtra government for a 30,000 crore rupee data center park in Palava. And if you want further details, my colleague Sudarshan lives around there. He's done an in-depth analysis. But we want to know about the stock. Tell us about Lodha. What's your view?
Good morning, Nigel. I think we have seen that trend in the past, Anantraj from real estate getting into the data centers. And now I think Lodha, with the huge land bank that they have, I think that's a good monetizing opportunity in the some of the emerging themes that these players can get into. So I think it's a better yield for them compared to what if they would have looked at a commercial place, because the entire space and the demand for data centers is huge. If a company gets that kind of size, space, and the infrastructure in one place, I think that's a win-win situation for all. So definitely, Lodha is something that we have been liking a lot in the Mumbai region, the MMR region. Lodha has had a premium positioning, and now with a new line of business they are getting in, I think that only adds to the overall positive outlook for Lodha.
By the way, the primary market is also active. So today is the last day to subscribe to Urban Company, and the other one is Shringar House of Mangalsutra. So Urban Company, we know, about 15,000 crore in terms of market capitalization. So far in the first 2 days, it's seen a subscription of about 9 times. And the opportunity ahead of the company is pretty large. And the other one is this House of Mangalsutra. Smaller company, market cap is about 1,500 to 1,600 crore rupees. The issue size was 400 crore rupees. But again, good subscription on the first 2 days, 8.25 times. The company, I think, has about a 6% market share in India's organized Mangalsutra. Last year, the company's top line went up by 30% to 1430 crore, and bottom line came in at 61 crore. Siddharth, as a house, are you all advising on these two, Urban Company, and the other one is Shringar House of Mangalsutra, and what would the call be?
So Rima, unfortunately, we are not having any view on these IPOs currently.
Got that. In the platform plays, since, there is a lot of interest, but stocks have also done very well. They've skyrocketed, and now Swiggy is also coming up with this Quick India movement. So they're going to rival the Amazon Great India Sale or the Flipkart $1 billion sale. So they're saying it's time now for quick commerce to come out with these. And they've come out with a date in September. So, there's so much news flow. There is opportunity. Companies are tapping into it, grabbing market share, expanding the pie. But amongst the entire platform play, which one do you like?
So I think, yes, we like this space. Platform companies, the profitability has gone up. And especially if you look at the food delivery business, they have been consistently generating cash flows. That is something that we have been liking. I think the platform fee has been hiked consistently. The other factor is that in the quick commerce space, the competitive intensity that has come down, and with the new players, Zepto saying that they now are focusing on cost and profitability with an eye on the IPO that they intend to do sometime later. I think that bodes well for some of the earlier players like Eternal and Swiggy, both of which we continue to like. We have what we believe is that the capex intensity will now come down in the dark stores. Profitability will improve both in the food delivery business as well as in the quick commerce business. Our preferred pick is Eternal. We have upgraded our target price to about 500 rupees. 420 rupees. And Swiggy also we have upgraded. We had a neutral rating and we have upgraded the stock to now a buy with a target price of 500.
Got it. Okay, all right. Sid, stay with us. For the time being, Hormuz, he goes through all those big volume movers and whether or not they have some delivery-based buying or selling. Hormuz, good morning. Fill us in with the list.
Good morning, Nigel. Wish you a very happy birthday as well. And, some of the names that you talk about in this list today, it's not too bad losing a race after all. And that Pharma's shareholders proved that yesterday with the stock. Of course, it's not confirmed reports for sure, but the stock was up the most since June of 2024 last year, 5.5% higher there. The volumes on the stock were the highest since April of this year. Almost 60 lakh shares changed hands, 20-day average of 13 lakh shares. And even the delivery-based buying, 18 lakhs, almost 17 lakh shares marked for delivery compared to a 20-day average of just around 6.5 lakh shares. But of course, the stock has been an underperformer this year, down 18% so far, despite this move in yesterday's session. Fedbank Financial Services, it came out in that late 2023 IPO rush. It was, barely made it through in terms of subscription as well. Yesterday was up 7.5%, and it was the second best day since the stock had since its listing. And because of this, it has closed above its IPO price for the first time since December of 2023, which is just a few days after its listing. And despite it being at a 52-week high, the stock is just 9% above its IPO price. The Thursday's volumes were highest since November of last year. 60 lakh shares traded compared to a 20-day average of close to 10 lakh, and almost half of that, or 27 lakh shares, were marked for delivery compared to a 20-day average of 4.5 lakh. Now, Green Panel Industries is another one, the biggest single-day gain in 6 years yesterday. The highest ever volumes in a single trading session for the stock. 2 crore shares traded yesterday. 20-day average is just 85,000, and 18 lakh shares were marked for delivery. 20-day average is only 54,000. But despite this, of course, it has managed to trim some of its year-to-date losses, still down 12% for 2025. And another name, Tollens Tires, seen some heightened trading activity in the last few trading sessions, particularly in the last 2 days when the stock has gone up 20%. Now, from its listing in September of 2024 till the 21st of August, the average daily traded volume on Tollens Tires was around 2 lakh shares. Since the 21st of August, it has gone up to 5 lakh shares. Even yesterday, over 1.2 crore shares changed hands. 20-day average is 3.5 lakh, and 6.2 lakh shares marked for delivery, a 20-day average of just 94,000. And yesterday's turnover, which was well over 230 crore rupees, was 1/3 of its overall market cap, and still down almost 18% from its IPO price, which is around 226 rupees for Tollens Tires.
Thank you very much for that. Let's talk about Gail. Yesterday, Gail was in focus on the hope that the long pending pipeline tariff hike may be announced soon. The stock closed up with a gain of about 3%. But Sonal is now joining in. Sonal, there is a Citi note and there is more good news in store for the company.
Tariff continues to be the big trigger point going forward. The Citi note talks about one of their subsidiary possibly getting listed. That's Gail Gas, which is the City Gas distribution arm of the company. They have a buy rating with a target price of 220 rupees a share. They say that Gail is inviting expression of interest from investors because they want to list Gail Gas from here on. And it is operating currently 16 geographical areas, and this is directly. And there are 9 geographical areas which are through joint ventures. Additionally, Gail is also in the process of transferring some of its own geographical areas to Gail Gas, which will increase the volumes overall for that company. They say these are early days, but still, if it lists, it could unlock 5 to 6% of the value for Gail, which would be 10 to 11 rupees per share in terms of value unlocking. Given stock price at current levels is ascribing no explicit value to that particular business, it could be a value unlocking exercise for the company and the stock overall.
Okay, all right. Thanks a lot for that, Sonal. Well, we'll slip into a short break. We come back. We'll get you the pre-open rates. We'll also be joined by Kumar Rakesh of BNP Paribas. Stay with us.
Welcome back. We will be getting our pre-open rates in another 7 to 8 minutes. Still in conversation with Siddharth Khemka. Sid, so it's upcoming festive season, the GST play. Give us your top 3 picks. GST/consumption/festive picks. Which ones will you go with?
Sure. So I think definitely there is a lot of hope that the consumption basket that should do well, and within that, what we believe is that if you look at, it's a wide range of consumption discretionary plays that we can like. So the top pick there is first is the company called Vishal Megamart VMM. It's a offline first retail stores largely present in tier 2, tier 3 towns. We believe that the strong expansion, strong growth, and the value retail format that where they have a good leadership and strong brand recognition that could do well. The other is Swiggy, as we already discussed. We believe with the GST rate cuts, the consumption boom, and the profitability coming back in the quick commerce business, that could be another stock to play for the overall consumption theme. Then the third stock what we can see is the hotels. Again, GST rate cut, traveling, GST rate cut below the 7,500 mark, strong expansion. So our preferred pick there is Lemon Tree.
Okay, all right. Sid, what about the metals pack? That's suddenly shining yet again. And NMDC is a stock actually that's been quite strong. And the reason is that we're going to get into the post-monsoon period, which is, the important period that we look at. So demand comes back out there. And also global pricing has strengthened a little bit. That in turn will make the case quite strong to go ahead and take a price increase here in India. What's your view at NMDC? I think yesterday it closed in the ballpark 75, 76 odd.
Sure, I think, Nigel, there are 2-3 factors that are also supporting the global metal prices. If you look at, there is a possibility of a rate cut by the US Fed that has also supported sentiments for metals, and we have seen the metal prices going up both in the ferrous as well as in the non-ferrous segment. Plus, as you rightly said, post-monsoon, the volume of take that will pick up, chances of price hike. Plus, the government has also come out with the rare mineral earth policy where some of these mining companies can possibly get another source of diversified business income. So we like NMDC. We have a buy rating and a target price of 84 rupees. It plans to double its capacity to 100 MTA over the next 4-5 years to capitalize on the overall rising steel production in India, higher iron ore demand. And we believe with the strong volume growth visibility, the margin improvement probability, and the prudent capital management, one can definitely look at NMDC from a long-term perspective.
You're also bullish on the consumer luggage sector. You believe it offers a multi-year structural growth story. So the top line can compound at a double-digit growth of about 12%. So you like both Safari and VIP here? And if go ahead.
Yeah, go ahead, please.
So tell us the rationale behind Safari, VIP. Between the two, which one is better placed? Because now there is a change in management when it comes to VIP also.
Sure. I think the entire story is that the luggage sector offers a multi-year structural story shifting from utility to lifestyle. And we believe that the organized players with almost 52% market share, growing dominance, the branded luggage industry is set to gain further with rising income, premiumization, and the domestic the Indian travelers now taking up a lot of up to travel. So while we also like the hotel space, we have been liking it for quite some time. Another way to play the overall travel leisure segment was through the luggage sector, and there we believe that the travel revival, weddings, students, corporate mobility, all those things could lead to a 12% industry CAGR over the next few years. Within these stocks, I think both of the stocks we like, both VIP. There is a recent underperformance, but now with the change in top management, we expect a revenue CAGR of 10%. But margin improving and a EBITDA CAGR of almost 50-60% going forward, driven by both volume growth and sharp improvement in margins. Safari has been a leading player, continuously outperforming the industry, 30% market share. They have reported a revenue CAGR of 36% in the last 2-3 years. They have focused on building the brands like the Safari Select, Urban, Jungle. These are the premier positioning. And then I think there also we are expecting a steady growth of about 25-30% earnings CAGR over the two. So between the two, I would say the preferred one is definitely Safari, consistently delivering strong growth. We have a buy rating with a target price of 2,700 on Safari. But someone who's looking for more risk or a kind of turnaround play, that there they can look at a VIP Industries where things are likely to improve going forward. Again, we have a buy rating and a target price of 530 on VIP Industries.
Okay, all right. So travel, consumption, delivery, and a lot of consumer-related plays. Got that. Siddharth, thanks very much. Good to have you on the show today, and you have a great Friday. We'll connect again soon. Well, we'll start getting the pre-open rates in the next couple of minutes, so good time to bring in our technical experts. Shrikant Chauhan and Mitesh Thakkar are joining in. Gentlemen, good morning to both of you and happy Friday. It's actually been a happy week for the market. Quietly, slowly and steadily, the Nifty's managed to come up to about 25,000. Mitesh, what's the approach going to be from here on?
Yes. Good morning, Surbi. Been advocating that we will head towards the upper end of the range, and you have some recent historical supply pivots around 25,150 and then 25,260 to about 300 zone. So I think these are the two targets which I have in mind. People who are carrying long positions on the index should take some profits around 25,150. And in case we start getting past that, I think 25,260, 300 would be the zone where I would suggest significant profit booking will come in. So that's the approach which we are taking. But on stock specific basis, and for the last many days, we have been trading with long bias. And as you rightly said, this is a week, when the markets have done better. I think next few days also look biased on the upside.
Got that. Shrikant, do you want to start with the index approach on a trade?
Good morning, Rima. Good morning, Surbi, and many happy returns of the day to Nigel.
Thanks a lot.
Yes. While looking at the setup of the market, one thing is very clear, that we are heading higher and we may even surpass the level of 25,200 because it's a gradual up move that we saw in the market. And number of sectors, they are participating in the market, and the way there is a gradual activity, we can expect further more activity in the broader market. But the ideal strategy should be to look for adding position if there is any correction during the day. And since last 3 days, whenever there is a correction in the market, we are seeing good amount of buying interest or strength from participant in the market. So today, as per GIFT Nifty, we may see opening somewhere close to 25,100, 150. There we can see some profit taking because FIs are consistently selling in the market. But in case if there is any correction close to 25,000 sort of levels, there we should look for creating some long positions. And also we like Bank Nifty, which is around 54,500, 600. There also we are expecting targets of 55,500 sort of levels. Currently, we are witnessing good amount of buying interest in PSU banks, but very soon we can expect activity in private banks also.
Okay, all right. Well, let's get to individual stocks then. Mitesh, you go first. What's on your radar?
Morning, Nigel. Wishing you a very happy birthday.
Thank you.
On the stock side, I have all buy calls, all long calls today. The first one is Gas Authority. I think I just heard the pre-market discussion. Yesterday, there was a good gap breakout, a bullish candlestick pattern, a jump in volumes. Looks like the stock can head towards 190 and it's a buy with a stop at 175. I also have a buy on Hindustan Zinc. It's managed to clear supply line, resistance line. So buy with a stop at about 439.5. Look for targets of 460. A buy call on Bharat Forge. We had a big breakout 3-4 days back, and last couple of days were spent giving a pullback. And the price was nearly flat, but yesterday there were signals of continuation. So buy here with a stop at 1190 for targets of 1250. And Steel Authority is the final buy call. Keep a stop at about 128.5. Look for targets of 140.
Okay, 4 trading calls coming in from Mitesh, Gail, Hindustan Zinc, Sale, and the last one is? Gail.
Sorry,
SAIL and
no,
GAIL.
I have Bharat Forge.
Bharat Forge, yeah. Okay, let's get in Shrikant Chauhan's trading ideas for the day. Shrikant?
Two stocks are catching my attention. One is GMR Infra. There we are seeing good amount of buying interest in the stock. There was a good amount of block deals in yesterday's trading session for the stock close to 87, 88 levels. From here, the stock can move towards 92, 93 sort of levels. So we should look for adding this stock at current levels with a stop loss close to 85.5. And the other stock on which we are bullish is Steel Authority. All these metal stocks, they are doing well, especially steel stocks in that Tata Steel, Steel Authority, Jindal Steel and Power. All of them are showing a lot of good amount of buying strength. But yes, we like SAIL. There we have a target of close to 140, and we can keep a stop loss around 129 for the SAIL.
Thank you, Shrikant. Pre-open seems to suggest about a 50-point pop on the Nifty, supported by IT. So Infosys could be the top gainer, 2.5% higher. And the other IT companies, stocks are being supportive. Tech Mahindra, TCS, HCL Tech, also perhaps likely to open in the grain. But moving on from tech to auto and technical ideas, the auto industry leaders have all welcomed the big GST reform. Speaking from the sidelines of the 65th SIAM convention, the industry leaders hope the GST reforms will translate into strong festive season sales. Listen in to their commentary.
Yeah, I think, it's been a really welcome move and a major reform which was very much awaited. I would say this was a request by the Automotive Association for a long period of time, I must say. It's a welcome move. It is coming just ahead of the festive season. So there will be a big boost in the short term. And in terms of how this whole thing will pan out is something to be observed. But, let me first talk about the short term. There has been a pent-up which has been building for 1.5 months since the time, after 15th August, people have been waiting for the GST reduction and, waiting to book their cars also. So after this announcement has happened, and then you have seen that pent-up being released in terms of bookings and all.
Biggest thing is that this GST is not sector specific. It is touching everyone in the country, every sector, every consumer in the country. And therefore, the overall demand or the overall consumption is going to go up significantly. And once the consumption goes up, whether it is a toothpaste or a brush or a car or a scooter or anything else or cement, or it has to be carried. It has to be carried on a truck. And therefore, the freight traffic is bound to increase. I think the biggest trigger for us is not the cut in the price, but this freight traffic which will increase, which will directly impact the industry in terms of needing more trucks and more buses to be able to carry these goods and passengers.
Okay, so those are some voices from the industry at the SIAM Summit that was underway yesterday. Let's take the conversation forward. Will auto stocks continue to be revved up, and are they a good bet? Let's discuss this with Kumar Rakesh, India analyst, auto as well as IT services at BNP Paribas. Of course, we're discussing autos for today's conversation. Kumar, great to have you in. Okay, let's start by understanding now what's happening. From the 22nd onwards, the new price cuts roll in. But most OEMs, I think, almost everyone, has already announced price cuts. So what is the inventory position, and has it become clear? I mean, what happens to the inventory? How is it going to be marked in terms of tax? And what should we expect over the next 3-4 weeks?
Hi, good morning, Surabhi. So we have seen about 2 to 11% of price reduction that has been announced by major PV OEMs. So bulk of the entire GST reduction has already been getting passed through to the customers in terms of price announcement. What happens in terms of the inventory position? Now, we understand that the GST part will be refundable, but the cess is still being debated, what happens on the cess side. So that is an overhang, what happens to the inventory on which the cess has already been paid. But we believe that should more of a transient issue. This reduction is permanent, and once we are passed through these transient teething issues, the industry should continue to see the benefit of stronger growth across all the segments.
Hi, morning. This is Rima here. I think you're neutral to negative on most of the two-wheelers. I think neutral on Bajaj Auto, Eicher, Hero, negative on TVS Motors. With this GST rate cut and the boost it will provide, Is it time to get constructive on any of the two-wheelers?
Hi, morning, Rima. Yeah, for sure. For the next couple of quarters, we'll see very strong growth for two-wheeler names as well. What we are concerned about is the outlook on the ABS implementation. Government had spoken about that from 1st January, the new ABS norms will get implemented for two-wheelers of 125 cc and lower. And if that gets implemented, it will largely offset all the price GST rate. And because of that, we would see the impact coming through.
I think we have Kumar on a bad line. Kumar, can you hear us? I think we've lost that line. We'll see if we can get him back in a bit, but I'm just going to quickly run through some of the BNP recommendations. The stocks that they're positive on are Ashok Leyland, Mahindra and Mahindra, Maruti Suzuki, some Vardhana Motherson and Tata Motors. But they're not that over-the-top optimistic on a lot of the two-wheelers, like Rima was pointing out. They're equal weight on Bajaj Auto, on Eicher Motors and on Hero as well. Kumar, sorry, I think we've got you back. So just complete your point and also tell us, why the preference for four-wheelers, passenger vehicle makers like Maruti, because the GST cuts aside, I mean, there was also this other debate all these years, right? That intrinsically the customer has moved on and he or she doesn't want small cars. He wants SUVs and therefore the whole M&M story. So just tell us what makes you still optimistic on PVs, including names like Hyundai and Maruti.
Yeah. So on two-wheelers, as I was just completing the point that the ABS price increase can potentially wipe out some of the benefits which we are seeing. And on the passenger vehicle side, we believe that the entry segment is still aspirational for a large set of customers, if you see, because the price point at which those vehicles are available, that is still pretty high from average salary or average income of Indian household. So if you look at the first-time buyer, it has fallen from about 49% to 40% in the industry. So we believe the pain in the entry segment or the small cars is more of a reflection of first-time buyers being lower in the market compared to how it used to be.
Kumar, we'll leave the conversation here for now. Thank you very much for joining in. Great chatting with you. It's 9:10. Let's get in some more trading ideas. Mitesh?
Yeah. I'll go with the buy on Gas Authority for the day.
Gail in focus, fundamentally and technically. Pre-open, stock is up nearly 1%, adding on to the 3% gain of yesterday. But Nimesh is now joining in with the standout brokerage report of the day. Nimesh.
Hi, morning, Rima. So today's standout is on pipe companies. It's the second initiating report in a week in that particular sector. After UBS, now JP Morgan has initiated coverage on two names, Astral as well as Supreme Industries. On both, they have an overweight rating. On Astral, they have a target price of 1,700. And on Supreme, they have a target price of 4,700. So overweight on both these names. Now, the JP Morgan note says that they expect a demand recovery and demand actually at an inflection point. In fact, they see a demand recovery in second quarter and a margin recovery in the second half of FY26. In fact, they forecast a 17 to 18% EPS growth over the next 3 years. The only risk to this call is the PVC price hike. That could be a bit of a dampener. But overall, from a sector perspective, they see a bit of a re-rating going on. Similar was a call from UBS as well earlier this week. Even they were expecting a volume recovery in the second half of FY26, and even they had they also had a overweight on Astral. So two sector reports, overweight and turning positive on the pipe companies. First was UBS, and now it's JP Morgan.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's focus on some of the capital market stocks then. They tumbled in trade yesterday and reports that securities market regulator is likely to float a consultation paper to consider ending the weekly derivatives contracts. Vamakshi is with us on the show to tell us more about that. Hey, Vama, morning.
Good morning, Nigel. Wishing you a very happy birthday today. And let's get straight to the news then. Sources yesterday were indicating that SEBI is likely to float a consultation paper to phase out weekly F&O contracts within a month. They were, they were weighing on transitioning to monthly expiries, and they would also consider a same-day expiry across exchanges. This was a story that was brought about by our colleague Yash. And, after that, we did see a very sharp fall in all of these counters. We saw a fall of anywhere between 2 to 5%. And the fall in stock price in most of these counters was also accompanied with the rise in open interest. So therefore, fresh shorts were added to the system in these counters. Now, take a look at the volume and delivery data as well. The volumes yesterday were approximately essentially double the 30-day average for counters like BSE, Angel One, as well as Nuvama. But 361 WAM was an exception because volumes here were lower as compared to the 30-day average. Take a look at the delivery stats as well. Now, for most stocks, it's not starkly different from the 30-day average, with the exception of Angel One. Apart from that, take a look at, Jefferies has also conducted a scenario analysis on speculation around the extension of the expiries to monthly, fortnightly, and the potential impact that they assess could be between, could drive a 20 to 50% cut to FY27 EPS for BSE, which is a massive cut. Apart from that, they're expecting 15 to 25% cuts to FY25 EPS estimates for Nuvama. Now, they have highlighted that there has been a 15% price fall since July, so shift to fortnightly expiry and separate settlement seems priced in. And today there is a SEBI board meeting, so all eyes will be on that.
Okay, all right, got it. Thank you very much, Pamakshi, for the details over there. Let's quickly recap, how a lot of the top movers that we had discussed earlier, how they have finally opened out for, trading, at least in the pre-open. So if you go by the large cap names, that Infosys is really cheering the buyback. 1800 is the price, remember, so it's a substantial premium compared to where the stock is right now. It's actually pulled up TCS along with it as well. Let's pull up Lodha now. Lodha making that big investment for data centers in Palava. Lodha is up 3%. Bharat Forge was the other one. JBM Auto also up about 3%. Travel food services adding more airports to their sort of portfolio. 3% up over there. Railtel high. Let's pull up NBCC because NBCC has struck a big order with the Rajasthan administration. The value is, I think, 3,700 crores. NBCC is up about 2% and some gains for GMR Power there as well. Down to the last couple of seconds. So we're going to kick it off with the Nifty opening higher by about 70 points. The bell goes off. And that's what we have, about 70 to 80 points higher on the index. The mid-cap index is actually doing slightly better. Mid-cap index has opened up with a gain of about 0.5%. Bank Nifty is very, very quiet as the day goes on. But we've opened up with a good bias in terms of far more stocks advancing than declining. So it's looking like a good start. Let's see if the bulls can build on it. Infosys, obviously, as you'd expect, is the key gainer out there. Let's pull up the heat map and just see how the overall picture is like. There are, of course, many, almost out of the 50, almost 45 stocks that are advancing. Of course, a lesser number of reds today. So it's looking good and it's fairly mixed on the upside for the time being. Infosys, TCS, of course, are taking the top position. By the way, the IT index has gained 4% this week. That's been the kind of surge that we've witnessed. And overall, Rima, it's all about Infosys and the excitement around this 1,800 per share price.
Indeed. And it also helps that IT had underperformed and valuations were fairly attractive. So that on the positive. And plus, because this buyback will take about 3 to 4 months to execute, the street believes that even in this period, we get negative earnings, the stock still gets supported.
There's a floor.
Right? There is a floor in place, even if the earnings, take some time to recover for now. So Infosys is your top gainer. In fact, the Nifty IT index is now 4.8% up for the week. So it's only building on and piling on gains. HCL Tech, TCS right on top. The other gainers on the large cap screen include a Hindalco that's up 1%. Maruti Suzuki, Kumar Rakesh of BNP Paribas was just telling us why it's his top pick. Tata Motors, a couple of these auto names, throw that in, are fairly supportive. ONGC, L&T on the green side. On the way down, consumption has taken a back seat. So the top three Nifty losers are Eternal, HUL, ITC. Not big by way of drags, just down about 0.2, 0.3%, but in the red for now in terms of the opening take. The Nifty is consolidating above 25,000. It's a gain of about 60 points, and this would be the markets are up in the green, at least for the benchmark indices, supported by IT today, and mid-caps are outperforming.
Well, that's right. Take a look at JBM Auto. That's flying away. That's up closer on 6%. Big move is what you're seeing on JBM Auto. Pull up a couple of other names. I think Sigachi was a stock that Hormuz was talking about yesterday. That's up closer on 4%. Volumes are massive out there. Brain Beast, yesterday there was a very large trade, I think of around 28 lakh shares on Brain Beast. That's got out of the way. The stock, in fact, is higher. It's up closer around 2.5%. So we'll keep an eye out on this particular counter as well. Vare Energies, everyone was talking about maybe there is no big visibility in terms of earnings and the likes. The stock has done very quickly, 2,300 to around 3,800. Just take a look at the recovery on that particular name. massive move is what we're seeing out there. HFCL reacting to positive news flow, so that's higher. Lodha as well is higher in trade today. So pretty good start, particularly for the broader markets, and that's why your portfolio will be feeling quite good this morning. AQ Lighting, yesterday as well the stock did see a rally. For this week itself, it's up more than 10%. And in today's trading session on large volumes, that one has bounced up close to around 5%. And the other one is Precision Camshaft. It saw a big run this week, and then in fact it saw some kind of profit taking, I think, yesterday. But for the time being, that stock has opened up with big gains. And a viewer just messaged me that happy birthday. And Nigel, last year on your birthday, the markets rallied. I just went and checked that data point. The markets are up close to 2% last year on 12th of September. So if the markets rally, I don't mind taking some kind of, I don't mind that it could be because of me. If it doesn't, then it's the market for you.
It's the market's problem. Yeah. It has nothing to do with the date.
By the way, BSE and Angel One are also recovering. After yesterday's big gashes down 4-5%. Today, BSE is up close to about 2.5%. Angel One is in the green. And Jeffrey says that even in the worst case scenario, the valuations is still pretty okay for BSE. I think they've put that number out, 30 to 40x in terms of FY27 PE. So they believe, in a way, the downside could be protected from here on. So they've bounced back. And Astral is the other one. Nimesh was highlighting it in the standout brokerage report. The target price set by JPM is 1,700 rupees. Astral now is sub 1,500. So they see upside. Stock is pushing up.
Absolutely. And when it comes to these capital market stocks, one can only hope that there is a quick clarity on the regulation as soon as possible. Of course, our story is, what Yash had put out yesterday was that there seems to be a conversation of completely doing away from the weekly options products and only having one single monthly expiry across all exchanges, all products. So let's see. That's one school of thought. That's what we are picking up.
And there's a SEBI board meet. There is a SEBI board meet today.
Yes. So the sooner, we have the final regulation, the better. You can just sort of,
let's see whether they deliberate, discuss on it, and we get any kind of sound bites or clarity.
Absolutely. Otherwise, the market's fine. In the mid-cap space continues to bounce around. Plenty of stocks which continue to find traction. Some of the defense names, by the way, we'll have a discussion on defense in just a bit on this 15-year roadmap. So some of the names like MTAR, Paras Defense, they are actually fairly excited today as well, 2 to 3% higher. Now, these ones, MTAR and Paras Defense, on the private sector names, they are up and about this Friday morning. So let's take the conversation forward. Manishi Ray Chaudhary, CEO of MR Capital Partners, is with us. Manishi, great to have you on. Thanks for joining in. So, GST bonanza, income tax cuts, RBI cuts, all of it is coming together to really lift sentiment in the market. And the market's also responding. The question is, can it really translate into better earnings? Where are you, Manishi, on the earnings estimates for this year after Q1 and after the range of policy announcements that have, that have just taken place?
Thank you very much for having me, Surbhi, and a very good morning to your viewers. First of all, the earnings environment in India for the past year, right from September 2024, has been quite bleak. We have seen consistent earnings estimate downgrades over the past year. And it hasn't stopped over the last 2 quarters. So one will have to watch very keenly the result reporting season for this July-September quarter, which will be across October and November. I have a feeling that this might turn out to be the worst quarter before we have a certain degree of, bottoming out of earnings estimates and a gradual recovery in the beginning of next year, in the beginning of 2026. The reason why I'm saying this is, number one, there's a lot of fiscal and monetary stimulus that has gone in. If you look at the latest GST cut, that is something around 0.5 to 0.6% of GDP. We have had the jumbo rate cut earlier, and RBI, believe me, has a lot of dry powder. Today, the real policy rates are close to 4%. It's only been twice as high as this over the last decade. So RBI, even though they have cut by about 100 basis points, they can cut potentially by maybe another 50 to 100 basis points spread over the next 6 to 12 months. So, number one, we have had a lot of fiscal and monetary stimulus. There's room for more monetary stimulus. At some point of time, this would have an effect on on the domestic consumption and investment environment. We're already anecdotally seeing that. There are, the signs of demand recovery in automobiles, for example. We've seen some companies cutting prices even, earlier than the September 22nd deadline. So, I think we will have to watch out very keenly for, for September, for the September quarter results to come out across October, November. But beyond that, I think there's a case for earnings estimates bottoming out and beginning to revive.
So Q2 should be the bottom, and Q3 onwards, things should start on an uptrend. Manishi, hi, morning. When we last spoke, you said you were completely avoiding IT and I think consumer staples. We'll get to IT, but first on consumer staples. Is there a case for a buy on consumer staples FMCG post the GST cuts?
Well, there would be some benefits, no doubt, to that sector. But at the same time, look at it this way, that consumer staples are well penetrated across India. And that is why, for years and years, the leading consumer staples companies are reporting top-line growth in the mid-single digits. At the same time, they trade somewhere between 40 to 60 times P multiples going forward. So in a nutshell, a single sentence answer to your question would be no. Despite this GST cut, I'm still not enthused about the consumer staples universe.
All right. Hi, Manishi. Good to see you, Ben. Manishi, the theme that has a longer runaway has to be some of the stock market plays. The problem is, in the last 24 months, they ran so hard that they've all come in for profit taking. Case in point being the exchange that's listed, that's BSE. From more than 3,000 rupees, it's closer to 2,000 rupees. You have Angel One, another stock, that was up, I think, around close to 3,500, 4,000 rupees. It's having around the 2,000, 2,200 rupee odd mark. What is your view on this capital market place? For a longer term investor, it could probably make sense. Would you believe so? But the near term, that could be a lot of pain. Your take?
Great. Thank you for that question. Very interesting. And even before I answer that question, Nigel, let me wish you a very happy birthday.
Thank you so much, Manish.
So, looking at that capital market universe, you see, there are a few different segments over there. Number one, you have the wealth managers. You have the likes of, Angel One, Nuvama, who are targeting the retail clients, very high net worth clients. You have the exchanges, which basically have to depend on trading volumes and IPO volumes. And these exchanges are also much more regulated. They're also much more, if I may use that word, slave to the regulations which keep changing. So, for example, if you have the same expiry date across, all exchanges, obviously that has an impact on the trading volumes in the derivatives segment. So, I, for one, am more bullish on the wealth managers. Some of them are, despite the fact that they have run up, are still trading at reasonable valuations. Many of them have had earnings estimates being, taken up over the last 6 months to 1 year. So one has to tread carefully in this segment. It is a good choice for India, which is likely going to have a capital market boom over the next decade. But one has to be a little careful in his choice, in his top choice over here.
So Manishi, what are you most bullish on now at this juncture? You like wealth management, but what else?
I still like, and I may be sounding like a broken record here, I still like the private sector banks. India's 10 to 12% GDP growth would have to be financed largely by the private sector banks. Yes, the public sector banks would play a role, but the private sector banks would obviously gain a lot of market share over the next few decades. Their asset quality is way better than the public sector banks. Their valuations, look at HDFC Bank, which used to be at 4 times price to book. It has now come down to somewhere close to 2 to 2.2 times. So that is, really front and center of my sector choice. I also like consumer discretionary. Again, one has to be a bit selective about valuations here. I do like the four-wheelers, automobiles over there, and certain segments within the consumer discretionary. I would include the health chains, the domestic healthcare chains like the hospitals and the diagnostic chains in here. I also like the industrials selectively, including the defense names, which have run up to sharp and valuation support may not exist there. But a combination of government infrastructure investments and potential revival of private sector capex would have a tailwind on that sector eventually.
Manish, I just want to come back to that point that you made on consumption. You said you're not quite convinced and you're not sort of jumping from the rooftops with that theme. Just expand on that. Does that call only apply to, say, pure FMCG staples, or do you mean across the board? And if you are not too enthused with these GST cuts and the consumer space, just tell us why.
Well, I wouldn't say I'm not enthused in the consumer space, because if you look at consumer staples and discretionaries have, I think an outsized impact, as far as the GST cuts are concerned. They are much more price sensitive. I mean, the price elasticity in the consumer discretionaries are way more. We are already seeing that anecdotally in automobiles. So I'm actually quite positive on the consumer discretionary space. It is actually in staples where, the most of the companies, most of the sub-segments are actually very well penetrated in India. And they're trading at humongous valuations. That is where I am a bit cautious.
Okay, all right. I understood that point. On IT, what's your thought process? And I mean, how are you looking at IT in the traditional sense, IT services, and a lot of these new age companies that have now become part of the listed universe, right? So, and tell us how an investor should approach it. The traditional firms, they do have cash. They're willing to share cash with their shareholders, like we're seeing in the form of Infosys. So do these older stocks still have a tactical place in the portfolio? And on the other end of the spectrum, you have the platform companies, your food delivery, quick commerce, and now urban company, house help, etc. So much more. Where would you put them? And how much would you be willing to allocate to new age tech?
Right. So, again, to answer in a nutshell, in a single sentence, I would certainly be more enthusiastic about the new age tech companies. If you look at the traditional tech companies like the TCS and Infosys of the world, it is very clear that these companies, they don't really have too many avenues to invest the surplus cash that they're generating, and that is why they're resorting to buybacks. No doubt. It's good corporate governance to return excess cash to shareholders through dividend or buybacks. TCS has been doing it for many years. Now Infosys has joined the bandwagon. But it also tells us that the core business volumes that these guys were relying on, that is under threat, either from the geopolitical tensions in the Western Hemisphere or from the threat of AI, which is writing a lot of code. And therefore, this manpower arbitrage model is, unlikely to work for a very long time. On the other hand, the Zomatos, Swiggies of the world, they have a very fast-growing market because despite the growth that they have had in the past few years, there's a humongous amount of space, a very large portion of the consumer which still don't utilize their services. So yes, I think the headroom in that second space, the new age tech, as you call it, is a lot higher.
By the way, the Nifty Bank has dipped into the red. It's a minor 50-point downtick. But from the day's high, it's lost about 220 odd points, and autos have overtaken IT now as the top sectoral gainer. The auto index is up 1%. You've got Eicher Motors right on top, and Eicher Motors this month has added nearly 13%. Tata Motors, Hero MotoCorp, Maruti, M&M, all gaining about 1.5%. So the first 15 minutes have seen autos make a comeback, also buying interest in many of them. Manishi, so in the consumption basket, discretionary, give us subsectors or themes that you like. Is it airlines? Is it the hotel plays? Would it be the travel platforms like your Ixigos and Yatras of the world? Would it be the luggage sectors, footwear? Is it trend and the likes? The themes in the discretionary consumption space, other than platforms, which attracts you?
So there are three broad areas that I would talk about. First, the domestic discretionaries, and right at the forefront are the automobiles, particularly the four-wheeler passenger vehicles, right? So they would likely grow faster than the two-wheelers, even though we are seeing some buoyancy in the rural demand as well. The second area would be the tourism-related sectors, and in that, quite a few smaller subsegments would come in: the hotels, the airline companies, the tourism platforms like you have. So, again, this sector, one would have to be a bit careful about the valuations. And the third, which I briefly alluded to, as the population becomes more affluent, they also become a little more health conscious. And this is not really a tailwind for the pharmaceuticals, but more for the hospital and diagnostic chains. So these are the three big focus areas for me right now as far as the discretionary consumption is concerned. And I think they will remain so for the time being.
Okay. All right, Manishi, we will leave the conversation there for today. Thanks very much for joining in. Appreciate you being with us. Have a good weekend, and we'll connect again soon. Well, that's a view from Manishi Chaudhary. The market is a little quiet this Friday morning, taking it easy, 40 points up on the Nifty. Mid-cap index has also cooled down a little bit from the opening highs. The Bank Nifty's got a little bit of a tinge of red on it, like Rima pointed out. So we'll see. It's a quiet start. Let's see if there's a pickup later. Let's focus on some stocks that are catching the eye. JBM Auto is definitely one of them. It's been up 5-6%. This company has managed to get some funding to purchase more EV buses. Let's go into the details with Sud. Sud, really revved up, JBM Auto.
That's true. So stock is currently up almost 8%. It's on the back of the announcement that company has made that its electric mobility arm, that is JBM Eco Life Mobility, has secured more than 100 million funding from International Finance Corporation. And that company is going to use that fund to buy and to bring those electric buses in the operations, and the number is going to be more than 1,400. It's 1,455, and also will finance the deployment of these buses in majorly in 3 states for which company had bagged the tender under PM scheme, and those 3 states are Assam, Maharashtra and Gujarat. Now remember, government has a target to increase the penetration of electric bus to 40% by FY30. So the stock also has been moving higher for the last few months, and now on the back of this funding, today also it's up more than 7%.
Okay, got that, sir. Thanks a lot for that. Let's hop across to Sonal. Sonal, tell us about Lodha.
Oh, yes. So Lodha is in focus because the company has signed an MOU with the Maharashtra government to the tune of 30,000 crore rupees. This is for green integrated data centers. The park will have a planned capacity of 2 gigawatts. It is designed to host multiple leading international and domestic players as well. The data center will be set up in Palava. And do remember, Palava continues to remain a big focus point for the company. In fact, in their Q1 presentation, they had indicated that Palava and Upper Thane will deliver 17,500 crores of sales in the next 3 decades with 50% EBITDA margins, and it will emerge as a data center hub as well, will create sizable recurring revenue stream for the company. The size is not given, but this is a move in the right direction, and that's why the stock is in focus today.
All right, Sonal, thanks a lot. Well, since you spoke about real estate, let's take the discussion forward. And to help us out, and we have our next guest on the show, who is Mr. Irfan Razak, the CMD at the Prestige Group. Thanks a lot, Mr. Razak, for joining in. Just give us a minute. We'll just run our viewers through the top 3 talking points that we're looking at. Point number 1, the demand trends in Bengaluru as well as in Hyderabad. Point number 2, the IT slowdown. Is it impacting demand? And point number 3, what are the pricing trends? Well, Mr. Razak, help us out with all of these then. Let's start off with the demand situation first in Bengaluru as well as in Hyderabad. Are you seeing some signs of weakness, both in terms of volumes, in terms of pricing as well? Because the indications are that IT demand has seen some kind of weakness. So is it reflecting on real estate demand?
Good morning, Nigel. First of all, let me wish you a very, very happy birthday.
Thank you so much, sir. Thank you for your good wishes, your support over the years. It's helped me a lot.
Now, to answer your questions, I think demand is pretty steady. Now, it also depends on which demand we are talking of. I think Bangalore and Hyderabad are doing extremely well. The only thing is in certain cities, like certain regions, some of the developers have made very, very large homes, and those are under pressure. But if I'm targeting the mid-income group housing with a decent ticket price, I think the demand is pretty robust and it continues to sell. And I think both in Bangalore as well as in Hyderabad, there's no change on any change in the IT hiring or whatever, because the economy is still robust and things are on ground very good. And you talked about pricing. Pricing also have stabilized, they've strengthened. At the same time, I think they've come to a level which has got the acceptability of the customer. We are trying hard to see that the price doesn't go too high too soon, because that's counterproductive. So that's always our endeavor, because one side the land price is high, the other side you have the construction costs, which are slowly creeping up. And with cement, the GST on cement being a little reduced, I think that will help us to contain the construction cost as well.
All right. What about NCR? That was one of the larger contributors, right? Some believe that maybe that market is peaking out. Would you concur, or do you believe it's got, a bigger headroom to move?
No, I think NCR has got a lot more potential. The only reason is the number of players are much reduced, and credible players are missing in that region, except for a few. And that's where the demand is coming towards them, including us. And NCR, we as a company have only one project which we've launched, and that has done very, very well, continues to do well. And we intend growing our footprint there, but surely, but steadily, and carefully, of course. And I think that is the strategy we have in the company.
All right. Mr. Razak, what about the office occupancy? That's the other spot that there has been some focus for you as well. So you help us with a couple of details. Office occupancy actually has been very strong. Could you tell us what is the total area under management, and what kind of leasing will you see for this fiscal year? And do you think this is the year for the REIT?
No, this is not the year for the REIT. Let me answer the last question first. I think we need to get a critical mass, and it will take us at least 3 more years or 4 years for us to get that huge mass that we are looking at. But on the leasing part, yes, you're absolutely right. Leasing has been pretty robust. We don't have any vacancies, or if the vacancies are there, it's just a few percentage, 3, 4, 5%. So that's the very, very positive trend. And even office, the lease rents itself have firmed up very nicely. Then again, it all depends on the product and on the location. If your location is good and your product is good, so automatically leasing will happen. But if you've got a rank bad location and a rank bad product, then there's a pressure. But I believe that the future is bright on office leasing. GCCs have now come in, and they are now bringing in the demand apart from ITES, so that helps the cause. And then, of course, data centers is the next big thing. But then data centers don't really consume too much space. What they need is a lot of power, and not the high-tech type of space, but high-tech in terms of the overall quality of power that we give them.
Mr. Razak, hi, morning, sir. Since you touched upon data centers, we're really talking about it today because one of your peer companies here in Mumbai, Lodha, they've announced a mega investment, I think 30,000 crores with the MOU with the state government just outside of Mumbai. How are you looking at this segment? I don't know if you already have, projects that you're building on the data center side, and just tell us the business dynamics. As a developer, is it remunerative to be getting into the data center business, or would you be better off doing what you anyway do, which is residential office, just in terms of margins and profitability metrics?
In the data center business, we will continue to be the infrastructure provider. We don't want to get into the data center business per se. We also, as a company, Prestige has signed a MOU with the Maharashtra government to do data centers. And the government is very keen to allot us some 50 acres in Navi Mumbai, and those discussions are on. And I believe that this is going to happen very soon. Apart from this, we're also looking at Andhra for the data center. We'll establish the data centers, There are many players who would like to operate that, and we are talking to them. So it becomes a win-win situation for the operators because they'll get a ready product. Because what they are looking for is the infra in terms of the setup of power, the setup of the building itself. And the buildings for data center are very, very different than what you do as an office building.
What I'm trying to understand, sir, the cost dynamics and the margins. Is the data center business more lucrative than, say, the regular office spaces that you set up, less, equal? Just trying to understand the business dynamics behind it.
The volumes may not be there in data center. You will definitely not get the square footage that you do in office space. But if you're asking me for return on investment, unless we don't get a decent return on investment, there's no sense in doing that business. So we look upwards of 15 to 18% return on investment. And I think that we should get that easily. And of course, there's no such mass sort of India now is a 1 billion square foot market for office. That can't happen in data centers.
Right. You spoke about that partnership, sir, with the Maharashtra government for data centers. I think that in Navi Mumbai, I think you all have also committed an investment of 12,500 crore for the same.
Exactly. Not only a data center, but also
logistics.
Logistics. So these are the two things that we had committed, and we have signed the MOU. And hopefully we will pursue this. It's not a partnership. It's the state government will support us in terms of providing the land, and the rest of the investment has to come from the company.
So what's the timeline?
And, we are pretty serious on that, and we shall do it.
Okay, so what's the timeline? When will all this come on stream, get commercialized? By when will you make this investment? It's a large investment of 12,500 crore rupees. And what is the expected revenue from it? You spoke about the IRRs before.
Yeah, I mean, see, it's not something that has to be spent on day one. So it's work in progress. The first thing is investment in the land itself. Then it's on the infrastructure, power, buildings, and all of that. So it's a outlay which will take between 5 to 7 years, starting from just now, which is the investment in land.
Okay. All right, sir. One final question then. How far are we from the IPO for the hospitality segment?
Yes, I think that's work in progress. The teams are working diligently towards this. And I think we should be about a month away from the listing, hopefully.
Oh, all right. So Diwali then, a good Diwali for that particular vertical.
Hope so. The teams are working. We've got the SEBI approval, but there are many regulatory steps that need to be done. So let's hope and pray everything goes well and we are able to do it as planned.
We're hoping with you, sir. Wishing you all the best. Appreciate you joining in. And we look forward to catching up with you to understand how the demand trends are going and also on that much-awaited IPO. Wishing you a good day ahead.
Thanks, Nigel. Thank you so much.
All right. Time to slip in a short break. After the break, we have Mr. Atim Kabra of Astra Micro. He'll be joining in. And Amit Mahajan of Paras Defense as well will be joining in to discuss opportunities from India's 15-year defense roadmap. You don't want to miss this.
Welcome back. Schloss Bangalore is seeing a bit of a pickup. There is an ambit note where they've initiated coverage. Their target price stands at 540. So that's a significant premium. The stock today is at 425, 3.5% up. It's compounding on luxury, and valuations too, according to them, are about 22 times 1 year forward EV to EBITDA. They like Leela and Samhi too in the hospitality hotel space. So now Schloss Bangalore, buy call 540 is Ambit's view on the stock, and that's pushing it higher today. But let's talk about Lupin. That's in news. Vinny joins in with an update.
Hi, good morning. So yes, we're keeping an eye out on Lupin. This is on the back of a brokerage note from Investec, where they've upgraded the stock to a buy from previous hold rating, increased the target price to 2,265 rupees. Previous target price was 2,100 rupees per share. Now, what Investec is saying, what are the positives that come in? Lupin will see a good benefit coming in from the GLP-1 opportunity that will start next year in India. So those generic launches for semaglutide that will come in, Lupin will be a big beneficiary. And do not forget, Lupin is already a key player in anti-diabetes as well as cardiac arrest therapies. So because of that, they'll always have an upper hand on that front and a beneficiary there. Now, other than that, recent approvals that have come in for Lupin are indicating its expertise in complex injectables. So they'll start benefiting on that injectables front for the company as well. And Investec expects a potential of around $20 million to $30 million annual sales for each of the injectables that are there. Post-correction, what Investec is highlighting is that now valuations are quite reasonable, and that is why for their base case, they're expecting strong FY26 performance, moderation in FY27 in terms of EPS, and growth will actually start coming back from FY28 and onwards.
Okay, all right. Thanks a lot for that, Vinny. Well, let's go across to Nimesh, who's here to tell us about Astral. Stock is high with a gain of around 2%. Nimesh?
Well, not only Astral, Nigel, the pipe companies are buzzing off late because there are a couple of initiating reports in just 1 week itself. After UBS, today JP Morgan has initiated a report on the pipe companies, and they have an overweight on both Astral as well as on Supreme. On Astral, they have a target price of 1,700, and on Supreme Industries, they have a target price of 4,700. For the pipe business overall, they expect the demand recovery at an inflection point. They see a demand recovery in second quarter and a margin recovery in the second half of FY26. In fact, JP Morgan expects a 17 to 18% EPS CAGR over the next 3 years. The only risk is the PVC price hikes which might come. So that's the JP Morgan call. Only 2 days back, even UBS had initiated on the pipe companies, and even they had a overweight on Astral, and they had a target price of 1,800 rupees. So net, I guess Street is warming up to pipe companies for a recovery in the demand, and initiating reports coming in for Astral as well as for Supreme Industries.
Okay. All right. Got it, Nimesh. Thank you very much for that. Well, let's move to our next discussion then, and we're putting the spotlight on the defense space. The Defense Ministry has unveiled a comprehensive modernization 15-year roadmap for India's future-ready warfare programs. To discuss what this means in terms of an opportunity and a boost for the sector, we have two key players from the private sector space. Tim Kabra, Director Business Development and Strategy at Astra Microwave. And we also have Amit Mahajan, Director Technical and R&D at Paras Defense. Thanks, Mr. Kabra and Amit, for joining in. Great to have you both back on this discussion. So what we really want to just, break this down and understand what this means in terms of an opportunity and whether it gives an additional fillip to the plans and to the estimates that you were already working with. Mr. Kabra, if I could come to you, because this has been divided in a very comprehensive manner across the procurement that the Air Force will do, the Navy will do, and of course the Army will do. What have you made of the 15-year roadmap, and does it give any additional impetus or thrust to the procurement that we're already seeing?
I think it's a very, good morning. I think it's a very transformational document which shifts us from import dependency to be a globally competitive, self-reliant powerhouse, growing in exports and at the same time based on indigenous innovation. I think the critical focus here is on indigenization, modernization, and operational agility, which calls for fairly advanced capabilities, technological self-reliance, and collaborative growth. We are talking of advanced network-centric human-machine teamed platforms with real-time situational awareness, at the same time, which are cyber-hardened, if I would say. So all I hear is solutions, right? And user requires timely solutions, and we need to respect that. Where do you really see user laying out his next 15 years roadmap? So to that extent, this is fairly transformational.
So Mr. Kabra, are there any projects which are mentioned in this long strategic roadmap that you're already working on? And would you require to undertake incremental capex to meet a potential increase in demand?
The Astra has very deep footprints, as you are aware, both horizontally as well as vertically in microwaves, radars, electronic warfare space, So from that point of view, there are a lot of projects which are ongoing, which will be feeding into the requirements. At the same time, I think what we will see is resulting in multiple JVs across the industry, by the way, in my opinion. So our shareholders, for example, benefit significantly from one of our hidden gems, which is our 50% stake in a JV with Rafael Israel, which makes SDRs, software-defined radios. Right. So this is a company which can dwarf Astra possibly in years to come. And that results in kind of a collaborative approach and new technologies being brought in. So while we have our own capability set, which will work in very well with the requirements, but at the same time, I think there will be a need across the industry for multiple tech platforms to be brought in out here. And with the procurement process being in the process of being streamlined, I believe announcements are expected pretty soon. I think this should be resulting in a fairly set of business for the industry as a whole. Astra definitely will be one of the beneficiaries. But as I keep saying, this is not an industry which you should look at it on a quarterly basis, right? So you look at stacks of 2 to 3 years, and these stacks should result in significant incremental improvements, which are fairly irretrievable, if I may say. And we go from capability set to capability set. So this document kind of defines that.
All right. Hi, Mr. Kabra and Mr. Marjan. Mr. Kabra, since you briefly mentioned about that JV with Rafael, what kind of possibilities, what kind of opportunity size, if you could throw some color on that, because that clearly is something that, is exciting investors, but we don't really have a number or some kind of value that it can be given to it. That could be another hidden gem. Tell us more.
Absolutely. It is a hidden gem, which is not much appreciated outside, the company. But we are expecting this year itself should have at least $100 million assured kind of business order book. In the JV. Of this, about 35% odd flows down to Astra itself. So it's a fairly significant business, which adds value not only to the overall space, but also Astra, which ends up doing significant work for the business.
Okay, so the JV itself. So the JV will create a value of about $100 million, right? And then it'll be shared.
Order book.
The order book.
Yeah.
Okay, to be obviously shared between Rafale and yourselves. Would that be correct?
It's a 50-50 JV, yeah.
50-50 JV, yeah. Okay. Gives us a sense of
profitable JV, and there are not too many profitable such initiatives around, right? So it's a testament to the managements of both the sides that we've been able to do this.
Yeah, absolutely. I mean, all of you companies, along with the defense PSUs, all of you make us proud with going after, cutting edge technology and really bringing that Atmanirbharta message back home. Amit, let's bring you in as well. You tell us, and we want to really understand this from a shareholder perspective. People want to understand, how do things scale up? Say, let's look at the revenue numbers now. So Paras Defense, I think at the end of FY25, your revenue stood at about 370 crore rupees. So as you work on a lot of these projects and procurement orders, when does the big kicker come in? I mean, and I'm not asking you for 1 quarter, 2 quarters. Say 2 years down the line, what will the company look like?
So firstly, good morning, everyone. And thank you so much for having me on the show. It's been a while, and it's so nice that all the three of you I can talk to. And, like Atim Saab mentioned, I think what we need to derive out of this 15-year roadmap, and we need to understand it's a 15-year roadmap. This is an industry which is a long-term industry. This is not a short-term quarter-to-quarter game. But what is interesting to see is the impetus is being given on the legacy platforms, the legacy technologies, the upgradation of your existing military might. And there is a good blend of the new threats that you can see. You can see a lot of loitering munition. You can see a lot of UAVs. You can see a lot of anti-drone technologies being given that importance, because what we have seen across the world, these are the technologies we have now started influencing your security infrastructure. So in this case, what we are seeing is the technology readiness is not at one particular point, but it has divided into very many spectrum of technologies. And Paras, if you look at, we've always believed that because we are working for Ministry of Defense and we are working for this industry, we should have all the variety of products that we can offer. Yes, strong point of our company remains the optics and optronic systems, but we also are trading into defense electronics. We are also into electromagnetics. We are also into heavy engineering.
So we know that. Amit, we know that. We've spoken so many times. My question is very specific. Investors want to understand the scale up in terms of just the revenue pie itself. Like I said, you're at about 370 crores now. 2 years down the line, what are you gunning for? When do you touch 1,000 crores in revenue?
So if you look at the growth trajectory that we have given, 40-50%. Now, when we look at these kind of news coming in from the ministry, it only solidifies your future. You are not looking at an inflection point where you'll take this to 100-150% growth. You will phase it out. Everything does not come at one particular point. So these are programs which will percolate down, and you will have a linear growth. 40-50% when you're looking at a growth, this only justifies that and maybe improves that particular possibility.
Okay. If I could just get, since the idea of this is to reduce our dependence, increase our indigenous capability, Atmanirbhar, what would your dependence be on foreign imports right now, Amit? And how will that come down by? Is there any number that you could both, if I could request both of you to share with us, Mr. Kabra and Mr. Mahajan?
So we primarily focus on developing technologies all by ourselves. Yes, there are collaborations that we have with certain Israeli companies, and we are bringing those technologies to the country. But the dependency for justifying the opportunities that are lying in front of us fairly lies on the domestic development capabilities, which also include DRDO, and they are the backbone of our development. But the dependency on foreign technologies is limited, and it will reduce further from here on.
And for, if I could request Mr. Kabra as well, for you, for your manufacturing, etc., what is the dependence on foreign imports today?
I think it's the component level where a lot of components are imported. The basic building blocks, they get imported into the systems. And so I would say, Amit is absolutely bang on target, right? As far as the solutions are concerned, it is the overall solutionizing which will be Indian, but I still expect that the chipsets, etc., which are not made out here, they will continue to be imported. So we have a fairly significant import content, if I may say, but usually that is passed on in the orders across to the clients.
Okay. And Atim, you spoke about enhancing exports. Exports is, I think, 10% of your overall revenue pie today?
Yeah.
Okay. Do you have a number in mind, say 5 years down the line, what that number could look like?
So I will make a distinction between deemed exports and exports of solutions. I would say export of solutions is something 5 years down the line should be at least 10 to 15% of the company from nearly zero at this point in time. And that's a very significant playbook that we are talking about, because by the end of this year, Astra is expecting that we will have completely indigenous, completely 100% Astra-owned, at least 3 radars plus very significant counter-drone systems with latest technologies built in multi-layered approach. And I think these are fairly global in nature. So we really hope to make a fairly significant dent. Plus our space business, we are more than a decade old in the space business. We are in conversations with guys who will source subsystems from us for their global space programs. I hope it works out pretty soon. You're already aware of our alliance with our arrangement with Teledyne, one arm of Teledyne. And we are really hoping that chip exports from our designed chips will also play a role in that. So at least 15% on an enhanced order book 5 years down the line from near zero will be the bare minimum that I would see for export markets.
Just very quickly, gentlemen, want to get your latest estimates on order book and order inflows for the next couple of months as well. And now in near term, we've spoken about the distance. Want to also get some near term clarity. Mr. Kabra, I believe your order book as of the end of first quarter was around 2,230 crores, if I have the right numbers. As you look ahead and as these roadmaps are announced, I mean, I'm trying to understand if the pace of awards is also increasing, if that's what you infer. And where do you think the order book position is going to be over the next couple of quarters? You'll be executing it as well, but in general, I mean, how will it move?
Astra has a guidance, if I'm not wrong, of about 1,300, 1,400 crores for the year, incremental order book, which shall come in. The incremental part, right? Okay, which grows on, and then from that is reduced what we produce for the year. I think what we are looking at is, you're aware that we discussed last time, we have a significant order which has come in from Bell. And if we are able to procure that quarter end, it adds nearly 1,500, 1,600 crores over the years to our order book, right? Of which certain part will come in almost immediately. So we are fairly well placed, and we are quite confident they will achieve the order book that we are talking about.
And Amit,
we are talking of, this 1,500 odd incremental going up to 3,000 plus.
Got it. So 1,500 crores, and if the BEL procurement materializes, then it will be going up to 3,000. Amit, same question to you very quickly. I think you're at just under 1,000 crores. What is the pipeline looking like for the next 2-3 quarters?
You're right. Our current order book is closing to between 900 to 1,000 crores. Yeah. We are looking at a good inflow of orders and a good revenue output as well. So with all of this put together, we should be closing this financial year with at least 50% better order book than what we have right now.
So 1,500 crores. Order book by the end of this year, 1,500 crores for Paras. Yes. Got it.
All right, very quickly, gentlemen. The scope is big, the opportunity is big. You have the government that's backing you all as well. Big runaway ahead. What about R&D spends? What does it currently say as a percentage of the sales mix, or if you could quantify it? And where do you see that headed? Because we have to be ready for a bigger runway, right? Amit, you go first.
So it's very tricky when you're working with defense and you're working with DRDO to earmark an R&D spend, because you're doing almost 30 to 40% of your revenues developing technologies with DRDO. So this is all that counts as an R&D effort that you're putting, you're developing technologies. So especially proactively doing R&D is on technologies that are new. Those are global in nature. And here for Paras, it is less than 10%, about around 5-6%. And this will continue to remain here because we are extensively extending our R&D for DRDO.
Okay, got it. All right. Adim, you want to come in as well?
Yeah, sure. Guys, Astra is front-loaded in terms of its infrastructure. So we are not looking at any incremental outlay, which is dramatically different from our yearly outlay on R&D. We have built up very significant capabilities and the machines, the testing equipment. We are very well placed, I think, to deliver. I think what we need to do is to cope up with the enhanced business, which we are expecting. We would be constructing within our premises another production floor, etc. And I think that's where a little bit of money will go in. But R&D wise, we are very, very comfortable.
Okay. All right. And just to clear the air, Mr. Kabra, you hold close to 3% in the company. You were an investor and then you started heading the company, or because skin in the game is something that investors like.
Yeah. Our board has, on the board, we have nearly folks who represent nearly 23-24% of the equity. My personal equity, I control about 5.55% or 5.6%. Don't hold me to it. Approximately, that's the number which I control, of which part is in my name, part is in a holdco, which I control. Yeah, so there's very significant skin in the game for the board, as well as all of us who are helping run the company.
Okay. All right, gentlemen. Great conversation, inspiring and spirited, and good luck to you, both of you, for all of those plans as India continues to move along the self-reliance path when it comes to defense procurement. Thanks for joining in. Well, with that, I think we've got some visuals coming in, and CP Radhakrishnan is going to be taking oath as the 15th Vice President of India. Remember, he was the NDA-backed candidate, of course, won by a clear majority. And I think shortly will be, those are the visuals coming in of the ceremony, and the oath-taking proceedings are ongoing. Okay, we'll keep playing those visuals. For now, a very, very quick break. Come back after the break and we'll get you a quick market update along with some more trading ideas.
Welcome back. The Nifty is still up about 70 odd points. JBM Auto is the star stock today. That's got a gain of close to about 8 odd percent. Schloss Bangalore, we were discussing it, that ambit note, 540 target price. Realtel continues to move up, and BSC has rebounded after the losses from yesterday. So that stands out. You've got Sigachi higher again. I think yesterday as well, the stock was up close to about 10 odd percent. The Sweet 35% up on Sigachi, Atul Auto, Shakti Pumps, Apollo Micro, Hindustan Copper too has been a big mover, and large volumes coming through on Hindustan Copper. So the mid-cap screen is quite vibrant, active, lots of individual stock movers. Vinay Rajani is now joining in. Vinay, chugging higher step by step. Markets have been consolidating with a positive bias. From here on, what's the trade?
Yeah, good morning. So 8th consecutive session of rise in Nifty, and yes, gradually strength is coming in, though we are underperforming the global market. But going by the sectors and participation by the sectors, it looks like that Nifty is headed higher only, and we have been giving bullish view to our traders. So now the support for the Nifty is now 24,900, which should be utilized as a stop loss in trading long position. I'm expecting a short covering in the Nifty, and the ultimate target of the Nifty should be 25,500 in next couple of weeks, we can say. So overall sentiment has improved, breadth of the market has improved, global market is quite good, and we have got a level about 25,000. There has been a downward sloping trendline resistance which has also been taken out convincingly. So yes, we are bullish with the stop loss of 24,900. One can expect Nifty to extend the gains, and the next resistance for the Nifty comes around 25,500, and Bank Nifty also we can see a movement of 800 to 1,000 points upside from this level. So yes, overall we are bullish, and stop loss in Nifty should be 24,900.
Okay. All right. That's at the index level. And what about stocks?
Yeah. So today defense sector has been doing quite good, and quite good momentum is there. So one of the stock which I like from the space is the Mazagon Dock, which has given a fresh breakout on the charts. So after healthy correction, stock started performing well. So Mazagon Dock around 2840, 2850, one can go long. For trading, I would suggest a stop loss at 2770. On the upside, I'm expecting a target of 2950. The second pick I would take from the private banking space, that is Axis Bank. So around 1100, 1104, one can go long. 1085 should be the trading stop loss. On the upside, I'm expecting a target of 1140.
Okay, all right. We'll leave it there. Vinay, thanks for joining in. Need to take a quick break. Come back on the other side. We'll be in discussion with two experts. M&A is going to be on the radar. Sumit Abrol of Grant Thornton and Bharat Bhavesh Shah of Aquarius will join in. We'll talk about the trend of outbound M&As from India and what it's telling us. Welcome back. M&A is on the radar, and we have two experts to talk about the trends. Sumit Abrol of Grant Thornton, and we have Bhavesh Shah of Aquarius with us. Thanks very much, Sumit and Bhavesh, for joining in. And the genesis of this discussion is obviously some of the latest announcements, including the one that came in from Tega Industries, a small company looking to acquire an international giant. And it seems that, leverage buyouts perhaps are coming back in fashion or back in trend, at least in this example that I just quoted. But you tell us, how do you rate and rank some of the outbound activity that we've seen over the last 12 months from India, and what lies ahead? Sumit, let's open with you.
Yeah, thanks for having me on the show. And I think let me start with two simple words: very activated. If I recall, last year, 2024, we saw about 120 odd cross-border outbound acquisitions valued at about $17 odd billion. This year, 8 months fast forward into August, we've already seen transactions worth about 11 billion already getting transacted, about 100 transactions already done. And all this activity cannot just be concentrated and driven by the mega deals. So there is very significant mid-market participation in outbound cross-border activity. That is expected, with what we've seen in the last 5 years in India, with Indian corporates not being in a better position or in a better shape to go after outbound expansion, with buoyant domestic demand, very healthy balance sheets, a very strong and supportive banking ecosystem, and very importantly, favorable capital markets, which are creating headroom on equity dilutions, which is creating that muscle power to support some of those exotic buyout structures, as you said, leverage buyouts, debt financing with equity coming in. And then, of course, there is that increasing gap in domestic versus international acquisition pricing, which is creating that headroom to deliver shareholder value. So I think overall, extremely exciting times and aggressive deal making by Indian buyers, and we are increasingly seeing a lot of Indian participation on most global deal tables, which are in play.
Sumit, lots of interesting points that you've raised, but let me pick on the last one and go to Bhavesh on aggressive deal making. Bhavesh, yesterday we had that big announcement by Tega, and Sumit was also talking about the rise of these mid-market champions from India going abroad, buying large assets. Look at Tega's example. It's a 13,000 crore market cap company, and they've gone ahead and acquired a company exactly of the same size, similar size. What are the pros and cons? Because there is some fear that Indian companies perhaps, or maybe in this particular transaction, you're stretching yourself too thin to make this buyout.
Good morning, and thank you for having me. I think there has always been an urge in the corporate India to kind of do outbound acquisitions, and we have seen this happening even in 2006, 2007, preceding the global financial crisis, and after the GFC, the trend kind of started, waning down. But the technology, the market positioning, the products that you get through international acquisitions is at a different level. I think the new drive is also driven by one of the major things which is now happening globally, which is the global trade rebalancing, which is happening across countries, driven by US tariffs. So the companies are even thinking about how do we now play the future in terms of markets, in terms of products, how do we export, how do we kind of place ourselves in terms of manufacturing. These are some of the important factors which is driving the corporate India in terms of the strategies. Some of these companies are large. They are, from a risk perspective, yes, the companies which are acquiring from India are, they're comparatively significantly larger in the international markets. But the question over here is, are the cash flows good enough to take care of the debt servicing that the companies are using to acquire them? And as long as the cash flows are good and there's a good amount of buffers which are put in as far as the operating cash flows are concerned, this may make sense with the very careful safeguarded measures. The outbound M&A can continue to do pretty well.
Absolutely, and that's really important, and that's exactly what we want to understand, whether the conversations are being as nuanced or not. And maybe quick sense from both of you, Sumit, on this. That's exactly my question. As deal makers, of course, your job is to get the deal, on the table and get it signed. But from a shareholder perspective, it's very important that a lot of the details, the intricacies that Bhavesh was pointing out, are taken on board. So the deals that you're seeing off late in the conversations, I mean, how much of it is bravado because maybe there's easier PE money or easier access to funds, and how much is coming in from just maturity and very careful consideration?
So maybe I can come in there and just to kind of counter that point. Yes, as deal makers, the idea is to get deals done, but it all starts with establishing the strategic fitment, which I think is top of the considerations to build any M&A rationale. The moot question here is that is M&A risky as a corporate strategy? I mean, of course it's risky, but is it any significantly riskier than putting any new capital expenditure or launching new products or getting into new markets? Perhaps yes, but I think Indian corporates, as I said today, are in a position to better manage the nuances. First of all, the willingness to assume that risk on back of strong tailwinds, and then ability to manage that risk is at an all-time high. When we look at transactions, there are clearly 3 or 4 things that stand out. the first test is, as I said, strategic fitment. And we are increasingly see that a lot of these acquisitions are being done to fill in some very serious capability gaps versus these being just pure value arbitrages. And of course, there are favorable financing structures to these Indian companies which they have never been exposed to, which are now available in international markets, which are fueling some of that activity. But what I can tell you is what we are not seeing. We are not seeing any big ticket deals breaching some serious deal discipline on fitment. We're not seeing any billion-dollar gambles as yet on untested, non-profitable, high-risk business models. Some of that activity which has been more localized. I don't think we are seeing some of those trends and themes in international activity. And I'm seeing that increasingly Indian corporates are seeing this as a real opportunity to seize the global center stage and to build some of those multinationals from India. So I think broadly we are okay in terms of the overall discipline that we are seeing on transactions right now.
Sumit, are we seeing similar? Yeah, go ahead, Bhavesh.
Yeah, and to add to that, I think we as investment bankers, at least at Equitas, we kind of don't think about ourselves as transaction bankers, but as relationship bankers to the corporates. So we would always advise what is in the long-term interest of the companies and the shareholders. Now, in that regard, it is very important that those safeguards which I mentioned earlier are in place. But what we are seeing also increasingly is even the corporates are very, very careful in what they are doing. I mean, of course, these are opportunities which need a very short time of decision to kind of, turn around and say, yes, we are there, we are not there. But at the same time, there is a lot of thought process which goes behind whether does it make strategic sense and what is the risk involved if either of the variables, which is operating cash flows or the debt or the market changes, these are definitely considered while going ahead with.
That's really good to know. It's very reassuring to hear that the aggression is measured, it's careful, it's calibrated. Very quick 10-second answer. So then the next hot sectors, the next set of big deals, where should we keep our eye on? Bhavesh, quickly, 10 seconds.
Yeah, I think industrials, pharma are one of the bigger areas where we can see some action over here.
Sumit?
Yeah, so the tailwinds of the shift in global supply chains will keep manufacturing industrials very hot. Technology-led acquisitions will continue to be in flavor for acquiring capabilities overseas. And then, of course, pharma is always right up there for big ticket deals on outbound.
Okay, gentlemen, we'll leave the conversation here for now. Thank you very much for joining in. Well, that brings us to a close in this edition of Bazaar. We leave the markets higher for the 8th day in a row, 0.25% up on the key indices. Thank you for watching. Don't go anywhere. Chartbusters is up next.